Hi everyone, today was doing really well until we got the Liberation Day announcement, and you can see absolute dumpster fire after that, down many percentage points. Over 2% on the first candle, almost 1% on the next, and then more than 1% on that next one with those two combined. So terrible, momentum bearish, RSI bearish in the after hours. Went all the way down to the 544 level here on the SPY charts, broke well below that 555 level. We'll see if any of this structure holds, but let's take a look at the longer term charts and see if we can find where we're going to end up tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's talk about it. The Liberation Day, the reciprocal tariffs. Let's take a look at the big board that everyone is talking about. You can see here, China charged 67% is what they're saying. We are going to charge them 34%. And then you can see all the way down the board, European Union. We are being nice, supposedly. We are less than them in every metric except for the United Kingdom here. Brazil in line with us at 10%. 10% is the lowest number. So if they have us at 10%, we have them at 10%. Nobody has us lower than 10% according to this metric. I don't know how true that is. From what I heard, they were saying they were factoring a lot of other things, not just the actual tariffs that are being applied. You can see here, including currency manipulation and trade barriers. What does that mean exactly? Not super sure, but from what I could gather, it means that they're factoring other things outside of just tariffs being charged. And based on whatever this made up metric is, we are being nice to them. Either way, all of these tariffs are going to be very bad for the economy and for the stock market. Like I've said before, maybe this helps the US industrial base over the next 5 to 10 years. If this continues to be implemented, which again, I don't think that's going to be the case, but for now, this is what we got, and markets hate it. Moving over to the economic calendar, it almost feels moot at this point, but you can see ADP non-farms coming in better than expectations. Factory orders better than expectations, so a little bit of strong soft data there. We do get some soft data tomorrow. That could be interesting. Most interested, honestly, in the Atlanta Fed data. I don't think it's going to move anything, but this is a leading indicator for me, and I do think this is giving us some bearish indicators with a minus 3.7%. That would be huge if it ended up being anywhere near that. And then for the Friday, of course, we have all the unemployment data and Fed Powell speaking. It's going to be interesting to see what he says, especially after the news today. And then moving over to the charts here, you can see it was an up day, about 0.5%. Everything was gravy. We went right to the level 565. That's where we thought we were going. We hit the zone that we thought we would. Momentum was bullish. RSI was bullish. Everything was good. And now you can see after hours, everything is not good here. We're all the way down at 543. Let's go 12-hour chart so you can see what that move looks like. Took out all these lows, took out the lows from that Monday session. We're back to the lows here now. And like I said on the weekend video, at this point, you have to assume the target is closer to that 535.72 level. That's what I have back here from that mid-September zone. This is what we're looking for here. Again, that assumes that markets are going to stabilize here. 544 is a level. We have kind of stabilized at that level, at least for now. Down 3.62% just on that 12-hour candle. So obviously very bad. You can see those hourly charts, very bad. Momentum bearish, RSI oversold. You can see we're almost oversold on the 12-hour chart. Is this the zone where it starts to hold up a little bit? Probably not. With that tariff schedule, it's probably going to continue to go lower tomorrow off of this zone here. Moving over to the SPY charts here on the Tasty charts, really only looking at the weekly because that's the only thing that's in play. Remember, we were in the kind of 544 area. That lowest ATR band is going to be 539. And then your next support after that is going to be the 89 EMA, which is there at 532.59. So you got some weekly trends in here that may help markets find some support in that area, but I do think that'll be only temporary. Either way, probably going to that 539 level, touch that, and then we'll see what happens after that. Moving over to the NASDAQ, pretty much the same thesis. Again, we were up 0.75%. Everything was great. Went right to the trend line, went right to that 21 EMA. Everything was good. And then after hours, a complete dumpster fire. We're all the way down here at 454.40 is the level. If we can hold that, we're below the trend. Your next trend support is in here, 541.50 or so. We'll see if that zone holds. Who knows? Obviously, this is terrible. This is a fundamental shift in how people are going to think about markets as we go forward during the Trump presidency. this could absolutely continue to sell, and we are now at a lower low. And then looking at the Tasty charts here again on the weekly for the Qs, you can see that lowest ATR band is going to be there at 449.35. So that's about 1% lower from where we are at in the after hours. You also got that 89 EMA there at 452.95. Current price there is about 450 or so for the stock in the after hours, which is absolutely massive, down more than $20 from that closing price there. You can see 476. We are down nearly $22 from that. So we'll see. This is a zone where maybe there's some bounce in it, but again, fundamental moves, they can absolutely cut through there. And then you could be looking at 419 as your next zone of support at that 144 EMA. Moving over to the Russell and the Dow. Again, both of these looked really, really good, and now they look really, really bad. The Russell is down here at 191.89 as my zone of support. We're already at that kind of zone here from April. This is what we were looking for here. If we did get that continuation lower, the next one is that 189 area. That takes you all the way back to the January of last year, kind of dip low before we had that strong rally out. So we'll see if that continues. And then the trend support here down around the 182 area, my level 183.28. And then looking at the Dow, it's below that 412 area after hours. Hasn't quite taken out the low. The Dow has been holding in there pretty well considering, but either way it is continuing to sell in the after hours. In terms of individual charts here, you can see Apple down to that 207 area. Took out the low here, 207.14 is the level. If that level goes, then your next is going to be this kind of trend area here around 200. My level 199.54. So could be a bit of a gap area. We can flow through there quite quickly. And then you can see Microsoft down to 370, below that 372 area. Trend support, let's go ahead and extend this out here. That would be down around 361, my level 360.99, somewhere in here makes sense. You do have support at 367. Structurally on both of these, that takes you back to the lows here from January of 24 as well. And then looking at Apple, that takes you back to this kind of mid-August. Apple's held up really, really well, even though they are going to be pretty impacted by these tariffs. And then looking at staples and discretionaries here, you can see both of these are down in the after hours. This is the 12-hour chart just to show that after hours price action. But you can see here, staples down 1.3%, discretionaries 5.05%, right back to these consolidation lows from last week, back below the 193 level. In terms of zone, we're right below that zone. If it takes this out, we could absolutely see a move to this kind of 185 area. This is an important high. We're probably going to take that out here. You can see it. Important high back here from July. If that goes, 185, probably where we're going. Volume profile fits that as well. You can see it right here, and then that next volume zone in here, 185. So my guess, that's where we're going. Moving over to Breadth. Breadth continued to do what we thought it would, continued to look really, really strong into the close. Obviously, this is not going to be true for the after hours and tomorrow's session. My guess is we'll probably see this fall to the quarter, if not lower tomorrow. Maybe that's the culmination style move that we needed, but we're in a good area, so there is a lot of room for this to fall to the downside before we see those kind of record lows on Breadth. So for me, this says there's a lot of room to go, and I'm super interested to see what this ends up reading tomorrow. Moving over to the dollar spiked down a lot on the news. It ended up finishing pretty unchanged, and then you can see the gap down for the start of that next session here. The Thursday session is already down 0.5%. Gapped below these lows here. Next support 102.98. If it gaps below there, or gets through there really, 102 is the next level, which would take you nearly round tripping this entire move at this point. We're below this kind of consolidation low, and you have to assume you're at least going to the trend here, closer to 101.2, or potentially that 100.95 level. Momentum bearish, RSI bearish. Never would have guessed that the dollar was going to move this far down. I thought we would get a higher low, but at this point, could see even a full round trip down close to that 100 level if this continues to sell, which you have to assume it will. The structure is quite bearish now. Moving over to bonds. Bonds were the only sector that seemed to like this at all. Bonds were up a little bit. TLT not super up. I want to see if there's anything in the after hours. You can see TLT pushing right to that 92.82 level. J&K gapping down. Interesting. So J&K doesn't love it. Risk off markets. That makes sense. And then TLT continuing to go higher. We said TLT was an opportunity, and it continues to be an opportunity. J&K, not so much. Gapped below that level. The next one is 93.67. If it gets below there, that's going to be pretty concerning because that's the zone that we were in back here. You could say maybe as low as 92.50 makes sense, but if we get too much lower than that, that was the zone of price that we were in when we were very, very concerned about market weakness back here, all the way back in 2022, October of 2022 lows. That could take you as low as the October of 23 lows. If sentiment is in that kind of area and we start to see J&K going lower, I do believe that is a forecast for pretty significant moves down in equities, probably more than what we're forecasting, at least for now. Then moving over to the VIX, again, doesn't mean a whole lot here. It was basically unchanged on the session. I'm sure this is going to spike all the way into the 30s, if not higher. That's a zone where maybe you could see some bottoms in the VIX, but again, I don't like technicals as much when we're talking about fundamental shifts. Technicals seem to matter way less when we are seeing fundamental changes to the economy, to Main Street, and as that translates to the stock market and gets priced in, it can absolutely cut through all of those technicals that you would generally expect to hold, because you're not being moved by sentiment really, you're being moved by a fundamental shift. Moving over to my accounts, I am super upset about this. I left this on because I thought I was going to be okay. I didn't take it off. I didn't really look at it at the end of the session. I knew we were way higher than where I thought we were going to be. So we were all the way up at 476. I was like, I'm down here at 468. I don't think we're going to fall a full 10 points, but sure enough, everything looks terrible in the after hours. You can see we're all the way down at 455, so I'm likely to get assigned on these, which is super frustrating. You can see I was basically at max profit. There was absolutely no reason to be holding this. Again, just an absolute disaster. Hopefully you learn from me. Make sure you check your options at the end of the session, especially going into things like Liberation Day. Hopefully we don't have another one of those. But like I said, I'll probably get assigned on this and then I'll have to start making decisions what I'm going to do with those shares tomorrow. Either way, don't love it. It's going to be terrible. Let me know down in the comment section what you thought of Liberation Day. Did it do what you thought it was going to do? Was it what you thought it was going to be? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.